Hi, I'm Keon, a research analyst here with Lipper, and I'm here to speak to you about fund flows for the week ending Wednesday, February 26th. Overall, it was a choppy week of trading for the market, although the Dow did manage to eke out a slight 1% gain for the week. Positive drivers within the market last week were new home sales had unexpected good news. They were up 9.6%, which brought its annual rate to 468,000, a level we haven't seen since July 2008. And there also was some M&A activity in the market last week. Most notably was Facebook acquiring WhatsApp for $19 billion. Overall, we saw net inflows for funds of $26.6 billion. Let's take a closer look at our macro groups now. All four macro groups experienced positive flows on the week. Equity funds were up $2.5 billion, taxable bond funds $2.7 billion, muni bond funds $300 million, and money market funds $16.1 billion. Let's move on to equity funds now and take a closer look at them. As stated before, they were up $2.5 billion for the week. This marked their ninth consecutive week of positive flows for the group. Overall, year to date, they're up $44.6 billion, which is on the heels of a very strong 2013 where they took in over $194 billion. Taking a closer look at the weekly data, we saw domestic funds up $1.6 billion and non-domestic took in $900 million. Moving on to equity ETFs, they were up $4.5 billion on the week, the third consecutive week of positive flows for them. Chief among that was PowerShares QQQ, took in $1.2 billion, and then two iShares ETFs, the energy ETF and the Russell 2000 ETF, both took in approximately $700 million for the week. On the sell side, the biggest outflow we saw was in the Technology Select Sector SPDR ETF, which was down $2 billion. Moving on to the taxable bond fund category, as we stated before, they're up $2.7 billion on the week, which is its eighth consecutive positive flows for this year. Most notably among that was loan par funds. So its 89th consecutive week of positive of net inflows as they took in about $600 million. Moving on to our taxable bond ETFs, they were up $500 million on the week, the fourth consecutive positive for this group. LQD had positive flows about $200 million. CIU took in $140 million. And on the sell side, the iShares Short Treasury Bond ETF was down $150 million. Moving on to our muni fund category, the third consecutive week of positive flows for them. The flows continue to be somewhat muted, but they were up about $277 million. National munis accounted for all of this with positive flows of $375 million. Money market funds. We saw positive net flows of $16.1 billion last week. A major turnaround from the week before when they were down over $43 billion. Taking a closer look, breaking it out somewhat, taxable money markets took in $17 million. Tax exempt were down about $800 million. And we saw the institutional investors were responsible for all of the inflows, with $17 billion coming into them. Okay, that wraps it up for us this week. If you're interested in learning more about this, please visit us at www.lipperusfunds.com. Please join us again next week. We should have some interesting news and see if Janet Yellen's statements about the Fed considering pausing their bond buyback reduction has any impact on fund flows and market activity.